This is the IUX Education Podcast, your shortcut to smarter trading and investing.
Where complex markets become simple. Let's dive in.
Welcome, everyone, to the IUX Podcast. We're your hosts from the IUX Education team, here to give you that shortcut to being genuinely well-informed.
And today, we're diving deep, really deep, into a story that's, well, it's pretty legendary in finance.
We are talking about Michael Burry. You probably know the name, often linked with The Big Short.
Yeah, and look, while the huge money aspect is definitely part of it, what we want to explore is something more.
More than just the dollars and cents.
Exactly. It's really a story about conviction, about, the loneliness of holding a belief when literally everyone disagrees.
And the courage it takes to stick to your guns when people think you're, frankly, crazy.
That's it. It's profound stuff.
Definitely. And we've gathered the key bits from the sources you shared, so you get a really concise but hopefully captivating look at him and his journey.
For anyone out there facing maybe a tough decision or just trying to cut through the noise, Burry's story has some pretty powerful lessons.
Okay, let's jump in. So before the Hollywood fame, Michael Burry's path was, well, unexpected is putting it mildly.
Totally unexpected.
Yeah.
He actually started out training to be a neurologist.
Right, studying medicine at Vanderbilt, doing his talk about a different world. From brains to market brains.
It's a huge leap. And what's fascinating, isn't it, is that while he's doing this incredibly demanding medical training by day, his nights were all about the markets. Completely different focus. He's spending hours, just hours, studying, reading reports.
And he started blogging, right, online.
Yeah, blogging about stock ideas, which sounds almost like a hobby, but it's way more than that. It was like this whole parallel life he was living.
And people noticed, didn't they? He apparently got a big following pretty fast.
He did, because his analysis wasn't surface level. It was incredibly deep, super logical, and let's be honest, brutally honest.
No sugarcoating.
None at all. No filter, just pure, raw insight. And that raw approach caught the eye of some major investors.
So it wasn't like he had connections or anything?
No. That's the amazing part. No formal finance training, no Wall Street network. It was purely his unique insight that led him to ditch medicine.
Wow.
And start his own hedge fund, Scion Capital, back in the early 2000s.
Just based on his own thinking and research?
Purely. Independent thinking, raw intellectual horsepower. It just forced people to pay attention.
That's what's so compelling. Building a successful fund, basically from the outside looking in, it kind of challenges that whole idea you need to be in the system.
He proved you could see things more clearly from the outside sometimes.
So, okay, what was driving him? What were his core beliefs about, how markets worked?
Well, his fundamental belief was actually pretty simple, but really powerful.
Which was?
He believed the market is often wrong. Just flat out wrong. Because people are emotional.
Fear and greed, right. The classic drivers.
Exactly. People panic, they get swept up in hype, they follow the herd, and all that emotion creates massive inefficiencies, mispricings, opportunities if you see them.
So while everyone else is riding these emotional waves, he's digging into the actual mechanics.
Yeah.
I read he was almost obsessive about fundamentals. Not just reading headlines.
Oh, far, far from it. He went to extraordinary lengths. We're talking reading thousands and thousands of pages, SEC filings.
For really dense stuff.
The super dense stuff.
Yeah.
Picking apart debt structures, reading complex contracts word for word. Things most people would just skim or ignore.
So while others saw safe investments, maybe just following momentum.
He saw, as you put it, hidden time bombs. He had this uncanny knack for spotting the cracks, the weaknesses nobody else saw, or maybe wanted to see.
Which leads us right to the big one, the defining moment. By 2005, he sees something huge coming.
Something almost nobody else did. The impending collapse, the total collapse of the U.S. housing market.
It sounds almost crazy in hindsight that people missed it.
It does. But he didn't just feel it was coming. He understood why. He saw how.
To subprime mortgages.
Exactly. Loans given to people who really couldn't afford them long term, often with those teaser low rates that would jump up later. But the really insidious part was how these incredibly risky loans were packaged together, bundled into these things called mortgage-backed securities, or MBS.
Okay.
And then this is the kicker they were given, top safety ratings, AAA ratings. Like they were super safe government bonds.
So like putting rotten apples in a shiny box and slapping a grade A label on it?
That's a good way to put it. On the surface, totally safe, looked like a solid investment, but inside,
Toxic.
Absolutely toxic, just waiting to fall apart.
So knowing this, what did he do? This is where the famous trade comes in.
Right. He decided to short the housing market, essentially bet against it. He did this by buying something called credit default, swaps, CDS on these mortgage bonds.
Okay, CDS. Like insurance?
Sort of, yeah. Think of it like buying insurance on these bundles of mortgages. You pay a premium,
Yeah.
and if those mortgages start defaulting,
You get paid out.
you get a huge payout. He was buying insurance on something he was convinced would fail, a massive bet that it was all going to crumble.
Wow. A bold move. Almost unheard of back then.
Defined his career. But you can imagine the reaction at first.
Yeah. Total disbelief.
Complete disbelief.
Yeah.
From peers, analysts, even his own investors. We know many of them tried to pull their money out.
They thought he'd lost it.
Genuinely believe he'd lost his mind. He was like that Greek myth Cassandra, wasn't he? Shouting warnings nobody listened to.
Must have been incredibly isolating. Not just financially, because the trade probably lost money initially.
For months, yeah. It cost money to hold those swaps.
But emotionally, too, to be that alone in your conviction.
Absolutely. Think about it. The market's against you. You've got lawsuits popping up.
Yeah.
Your own investors are furious, demanding their cash back, constant ridicule.
That pressure would break most people.
It would.
Yeah.
But Burry, he held firm. He just trusted his research, trusted the math. He refused to get swayed by the noise or the short-term losses.
That conviction, based on actual data, that's rare.
Exceptionally rare. He wasn't just guessing. He'd done the incredibly deep work.
And then it happened.
Then it happened. 2007, 2008 rolls around.
And the crash comes. Exactly like he said it would. Housing market just implodes.
And it drags the whole global financial system down with it. The ripple effects were enormous.
The numbers were staggering, weren't they, for his fund?
They really were. Scion Capital, his fund, made over $700 million for its investors.
Wow.
And Burry himself, his personal profit was over $100 million.
Just incredible. Made from a bet everyone else thought was insane.
Insane or impossible.
And this, of course, is where many people listening probably know the story from.
Yeah, the movie.
The Big Short. Christian Bale playing him. It took this, potentially dry financial story and made it into this blockbuster.
Absolutely. Put him on the global map.
Yeah.
Made it entertainment, but also a really crucial warning, didn't it?
It really did. So let's unpack that central question then.
Sure.
How did Michael Burry pull this off when pretty much everyone else missed it? Or maybe didn't act on it? What made him different?
I think it really comes down to a few key things about how he operated and maybe how he was wired.
Okay. Like what?
First, just pure independent thinking. He genuinely did not care what the consensus view was, what the headlines said, what the big banks were pushing.
Did he follow the crowd?
Not at all. He looked at the raw data, formed his own conclusions, and then crucially, he trusted them, even when they flew completely in the face of conventional wisdom.
It's one thing to think differently, another to act on it with millions, potentially billions on the line.
Exactly. And that leads to the second point, that thinking wasn't just a gut feeling. It was backed by absolutely deep research.
The obsessive reading you mentioned?
Yes. Most traders, even the pros, they skim. They read summaries, analyst notes. Burry read everything.
Like the actual mortgage contract.
Literally. He went through mortgage contracts within those bonds. He read the footnotes, the appendices, the tiny details everyone else skipped over.
Going right to the source code of the problem almost.
That's a great way to think about it. He saw the fundamental flaws because he looked at the fundamental pieces.
Okay, so independent thought, deep research. But then there's the pressure. How did he handle that? The emotional resilience.
This is maybe the most critical part. Because, as we said, the pressure was immense. Ridicule, lawsuits, investors wanting out.
Your own money disappearing on paper for months, maybe years.
Right. But he stuck with it. He trusted the math over the market noise. He understood the difference between a temporary drawdown and being fundamentally wrong. His conviction ran so deep it let him withstand all that pain.
Incredible mental fortitude, almost like a superpower.
It really is in that world. And then finally, risk management.
Okay. Because it was a huge bet, but maybe not a reckless one.
Exactly. Even taking this massive contrarian stance, he understood the downside. He structured the trades carefully. He knew what he could lose and made sure the firm could handle the market moving against him initially.
So not just betting big, but betting smart. Calculated.
Very calculated. So those four things: independent thought, deep research, emotional resilience, and smart risk management. They were his toolkit.
And those are traits useful way beyond just finance, right?
Absolutely. Burry's story, it really is more than just a trading coup. It's like a blueprint for intellectual courage.
Yeah.
Having the guts to question things, the discipline to do the homework, and then the fortitude to stand by it, even when you're totally alone.
And for you, the listener, the lesson seems so clear. That ability to stand alone, to dive deep, deep, deep into research and really avoid that groupthink trap.
It's about cultivating that internal compass, isn't it? Rather than just drifting with the crowd.
So how can you apply that? Whether you're trading, investing, maybe building a business?
Or just making any big life decision, really. The core idea is the same. You don't need everyone to agree with you to be right.
But you do need that conviction.
Conviction backed by solid proof. Do the work. But it also shows, I think, the cost. Being right too early can be lonely and painful. It takes discipline to see it through.
And Big Short movie, it brought all this to millions. It wasn't just entertainment.
No, it served as this huge warning shot, didn't it? That even the biggest, most solid-seeming systems can actually crumble if people stop asking the tough questions.
If no one looks under the hood, challenges the status quo.
Yeah. A reminder to stay vigilant, stay questioning in all parts of life.
So that wraps up our deep dive on Michael Burry, the Big Short legend, you could say.
Definitely a legend. Saw what others missed, acted with conviction, made history.
An incredible journey.
And if this story resonated with you, if it sparked an idea or maybe some encouragement, think about sharing it. Maybe share it with someone you know who feels like they're standing alone with their own big idea right now.
Yeah, that's a great thought. We really encourage you to reflect on, how important independent thought and really thorough research are in your own life, whatever you do.
Cultivate that inner voice. Trust your well-researched conclusions.
And until our next deep dive, maybe keep this in mind.
Stay curious, stay skeptical, stay sharp.
If you want to follow us or learn more, please do check us out at IUX Education. We've got loads of learning materials, articles, and of course, more deep dives like this one, all designed for traders and curious minds.
That's right.
Join us again soon for more fascinating topics and timeless lessons. See you next time.
And this is the IUX Education Podcast, where trading confidence begins.
That's a wrap for today. This episode was brought to you by IUX Trading Platform, your trusted partner for smarter investing.